question that has been constantly asked to me is my take on the Zomato IPO. Now, while IPOs have been hot all of last year, no IPO has generated a buzz as much as Zomato. While the increased demand, improved metrics in fiscal year, or rather financial year 21-22 are being discussed, the question remains on the high valuation that Zomato is asking. The IPO price band of 72 to 76 implies a market cap of 55,000 to 60,000 crores. Okay, so that's a market capitalization of Zomato as per the valuation band that has been laid down in the Zomato IPO. Now, when the market is fully mature, it can trade at 25 times market capitalization divided by EBITDA. Looking at global peers, that's how it should be. This implies an annual EBITDA of expectation of about or approximately 2,500 crores. Okay. Now, at an estimated overhead cost of 2,000 crores, it implies therefore that Zomato needs to earn a contribution profit of about 4,500 crores to 5,000 crores annually at a full scale capacity. Contribution margin or CM per order of the 20 rupees per share, generally 5% of an average order value, which is about 16 rupees per order last quarter. Okay. Now at, let us say, 20 rupees contribution margin per order, Zomato will need 225 crore orders to generate that kind of EBITDA. For reference, they have done 40 crore orders in their best year, which was fiscal year 1920. Now, assuming that 40% market share for Zomato, there's competition from Swiggy and restaurants having their own delivery setups as well now. It implies that 560 crore food delivery orders per year across India. Okay, that is in a year. That is what the assumption would be. Now, this means that 11 crore households out of a total of 25 crore households, or 45% of the country, of the nation, India, will need to order once a week to reach this number. 11 crore households out of a total of about 25 crore households will need to order once a week to reach this number of orders that can help it to generate that kind of EBITDA, which would justify the market capitalization of Zomato. That's the mathematics that we are looking at, friends. Now, Zomato's valuation of 4 times GMV and 45 times the revenues for the estimated financial year 21-22 is significantly higher than many of its global peers. Say, number one, let's take Delivery Hero, which is a leader in 35 of the 40 emerging markets under consideration. That is less than 1 times GMV and 7 times sales. Okay. Zomato's valuation is 4 times GMV and 25 times revenues. Okay. Delivery Hero, as I mentioned, 1 time GMV, 7 times sales. Let's take the other one, Meituan, which is China's largest food tech. Okay. It has got a 65% share in China. Now that is at about 1.5 times GMV and 6 times sales. What Zomato is asking is 4 times GMV and 25 times revenues for this particular estimated financial year 21-22. And let's take the important one, the recent IPO and one which generated a lot of craze, DoorDash, which is the US largest player. That is at 1.5 times GMV and 14 times its revenue or sales. Here we have Zomato at 4 times GMV and 25 times estimated revenues for financial year 21-22. So all the valuations look to be on the higher side. Yes, it's an expensive IPO to subscribe, but to answer or to cut the long story short, there's a fancy around it because this is one of the early ones. You'll be finding many IPOs in the digital, in the fintech space, in the digital space. Very soon you'll be followed. This will be followed by MobiKwik. You'll also find Paytm coming around Diwali time. So there'll be a series of IPOs in that order, and you find Zomato being the first of its in the series. There will be some amount of excitement. The early entrant in the IPO field in the digital space. Therefore, I believe that there may be some fancy attached to it. And while the market is doing well, you may see some listing gains. However, if you go by pure metrics, pure valuations, yes, Zomato is not so much of a welcoming dish as many of the dishes that Zomato brings to your doorstep. But looking at pure fancy, investor craze, and being the first of its kind in the digital space, you will find there could be some listing gains in Zomato. So, on that ground, exclusively, just to get a fancy of the piece of in action, you can subscribe to Zomato. Valuation wise, not cheap. Once the dust has settled and many of these IPOs have come in, MobiKwik, Paytm, so many fintech IPOs have come in, you will find that Zomato could retreat back to a much lower level. So medium term to long term, not a good bet. Short term listing gains quite possible. Okay. So that's my take on Zomato. And before I conclude, do remember that this type of craze comes very often. Very often you will find that the markets encourage, or different eras have come. You found a dot-com era where many of the software companies kept getting listed. There is always premium for newness, for excitement, for new ideas. Okay, and the market always rewards new companies coming in some new space. But history has taught that once the dust has settled, once all is said and done, you find that these IPOs do not anymore command the type of premium which they promised at the time of the IPO. But listing gains for the initial new entrants in this field will definitely be on the cards. And while the market is as well robust, you can definitely go and get a piece of the pie of the pizza that Zomato delivers at your doorstep. So this is my take on the Zomato IPO. Enjoy and have a delicious menu from all the nice things that Zomato brings to your doorstep. Happy investing. Take care, and do not forget to join my Premium or Premium Plus to get more good stock market ideas and to get more option ideas. Do join Premium or Premium Plus. These are my Telegram groups, and the number to get in touch 982-086-1044. Happy investing and have a great Zomato of a day. Take care. Bye bye.